Hey everyone, welcome back. So today is Wednesday. Obviously, the Fed provided their 75 basis points hike in the rates. Bitcoin, the markets, everybody liked it. So obviously, we're going to take a look at Bitcoin here, see how it's doing today right now in the charts. We're also going to take a look at the miners. The miners had a great day for the most part as well. Some of them were up over 20%. So we'll look at those guys as well. We also have some news from Core Scientific. So 75 megawatt colocation. We'll get into that a little bit, give you my thoughts on it. And we'll also take a look at obviously the rate hike. What does it mean for the general person, somebody that has a home or something like that, or is going to be buying a home. So there's obviously some implications for that. And we'll also talk about a little bit the mining disrupt, but we'll just get into a little bit here at the end, see what we can figure out. And as always, not financial advice. You guys know the drill here. I'm invested following coins and companies. So let's get into Bitcoin here really quick, and then we'll get into the other news. So Bitcoin right now is at 22,860. Roughly, it is up 7.52%. This is on the daily chart right now. RSI has obviously come back way up. If we look at the 1 hour chart, obviously the price has come way up here in the last couple hours. Right after the Fed basically released the 75 basis points, Bitcoin just took off like a rocket, which was a little concerning because we are way overbought right now in the territory. The good sign is here that I'm seeing is RSI has been coming down from this point, basically right around here has been coming down, while the price has been going up. So that's at least a partially good sign for the short term. I don't know how long it's going to last. We may have a dip tomorrow, which sometimes happens. We'll have to keep an eye on it, obviously, how the markets basically react tomorrow. Today they were jubilant. Tomorrow they might be looking to sell. So on the 4 hour chart, we're also looking a little bit high on the RSI and looking to see where we are right now. We are still lower than from the previous one, which was pretty close to here. Obviously, we were up around 23,600. Now we are down to 22,800 or so. So still not looking too bullish, at least on the short term. But it could obviously change with continued price appreciation and decrease in the RSI. So we'll have to monitor that one. Ethereum is up 12.2% right now on the day. It is at 1,626. It has obviously rocketed pretty hard as well, along with Bitcoin here. If you look at the 1 hour chart, same thing here. It went up pretty fast. It's way in the overbought territory right now on the RSI. Looking for a little bit of a pullback, at least in the next day or so on it, just to kind of cool things off here, at least on the 1 hour chart. The 4 hour chart is obviously looking pretty hot as well. And the only thing is on that one, the RSI, we're close to it here, but we're about this pretty same, a little bit lower on the RSI if we look at it really good. We're a little bit lower, but obviously the price is up higher, but the RSI was also higher here as well. So we're kind of even neutral right now for Ethereum. So we'll have to see how this one plays out as well. On the daily chart, we're actually higher in price, but lower in RSI. So that is a good sign, at least possibly for longer term duration, at least the way I'm looking at it right now. All right, so let's get into the miners here really quick, and then we'll get into the other news as well. So ANY was up today 8.13% to 65 cents. And then we got Argo blockchain was up 4.69% to 43 cents. Bit Digital was up 3.4 to $1.52. And Bitfarms was up 9.52% to $1.38. CleanSpark was up 6.82 today to $4.07. Core Scientific was up 18.34% to $2. Nice gain there. DigiHost was up 11.02% to $1.31. DMG was up 10.42% to 25 cents. Hive Blockchain was up 14.66 to $3.91. Another great gain there as well. Hut 8 was also up quite nicely to 14.2% up to $2.01. Iris Energy was up 12.5 to $3.96. And Luxfolio was actually down 5.68 to 10 cents. We're still waiting on Luxfolio to provide their June production updates. I actually tweeted to them this afternoon to see if they're going to be providing that or if they already did, if they could share a link with us so we can get that updated as well. Marathon was up 21.86% to $12.32. And great day for Marathon, obviously. And Mawson Infrastructure was down 2.9% on the day to 75 cents. And Riot Blockchain was up 15.14% to 7.15. And finally, Stronghold was up 10.64 to $2.60. And that is it for those guys. So obviously, when we see Bitcoin pumping, going up 7%, we can see that the miners are going up 14, 20%. They always do better. Well, I wouldn't say always. Some of the miners always do better than Bitcoin, but in the long run of things, they always tend to do better than Bitcoin in the long run. Okay, so let's take a look at the first story we got here on Core, and then we'll take a look at the Fed rate hikes as well. So this came out on Tuesday. So Core Scientific announced agreement to host 75 megawatts of ASIC servers. 75 megawatts is quite a bit. It doesn't say who they are hosting it with, but here's the main details of it. So the recently signed colocation agreement will generate approximately $15 million in annual revenue when the ASIC servers are fully deployed. In addition, the agreement provides for prepayments sufficient to fund the additional infrastructure required to host 75 megawatts. This is actually really good. Maybe they're getting a little cash up front to build it out, and they're not relying on their own cash or having to get loans and things like that. So that's actually really good. Server deployments will begin in the third quarter of this year, with full deployment to be completed during 2022, which is quite impressive. So let me see if we can pull up. Let me see if we can do this. Let's see here. I think I have a megawatt somewhere. Let me see if I can pull that file up. And let's see here. Let's go to, what do I want to do? Let's go to the iPad for now. And then let me see if I can pull this up really quick while I'm thinking about it. And we'll take a look at see what that actually means, the 75 megawatts. Let me see here. Mining calculator. That's not it. Let's see here. Miners. Let's see if it's in here. Sorry, guys. I should have had this prepared, but I don't. So we'll see if we can figure this out really quick here. There it is. Watts to hash. Okay. All right. Let's share the screen. And let's make this big. All right. So they're saying that they're going to have 75 megawatts. So that's 0.02. Let's do this 0.075. Is that 75 megawatts? Yep. Okay. So that's 75 megawatts. You're looking at basically 60,000 kilowatts if we were using 80% of the load there for it. And we're using roughly 3.1 kilowatts per miner, so 3,100 watts. Total number of miners we could install would be about 19,355, which is a lot. And then if we're using the 140 terahash per miner, that would be obviously 2.7 exahash in speed, in network speed. But if it's only the 110 terahash miners, we're looking at 2.13 exahash on it. So still a substantial amount, obviously, for hosting. So there's a pretty sizable increase, obviously. All right, let's see if we can pull up the next story. I just want to point this out to you guys, kind of run some numbers through it. And let's see here. There it is. I think that was it for Core. Like I said, they didn't provide any information as far as who the hosting customer is, but we'll have to find that out maybe later on. The only bad thing about hosting is that they don't make a lot on it. The net percentage of net income from that is like 3 to 5% of gross income from hosting, it looks like. I could be wrong, correct me if I'm wrong on that, but looking at the previous financial statements, that's kind of looks like where it's at, between 3 to 5%, which isn't a lot. So if we're looking at 5% of that, of 50 million, you're looking at, what is that, $2.5 million in net income basically from it, after all expenses are paid for. So we'll see how that works out for them. But the good thing is that they're not spending their own cash to build it out. So that was it for Core. Let's get into the Fed rate hike really quick, and then we'll take a quick dive into mining disrupt, which is happening right now. So the Federal Reserve obviously just moved to to make your credit cards, mortgages, and car loans more expensive in hopes you'll spend less and help cool inflation. Here are the important parts of it. So the Fed raised interest rates by 0.75% points on Wednesday, repeating the hikes seen in June. The increase triples the size of the Fed's usual hikes and marks an aggressive effort to cool inflation. We obviously had 9.1 CPI data come in June, so that's obviously the reason why we're seeing 75 basis points right now. So higher rates makes all kinds of debt, from credit cards to mortgages, more expensive, which is true, and that's obviously in the hopes that it's going to slow everything else down. Reading this article, here's the main parts that I found were interesting. So the Federal Reserve's 75 basis point increase now means that in the space of just 4 months, they have hiked rates by as much as they did over the entire 2015 to 2018 hiking cycle. Semas Saha chief global strategist at Principal Global Investors, said, "This is rapidly proving to be one of the most aggressive hiking cycles we've seen in recent decades." I would have to agree with that, obviously. We've had pretty easy money here in the last couple of years. Now we're getting a little bit tighter. And, hopefully a lot of people were able to also take advantage of the lower rates that we had during the after the pandemic or during the pandemic and after the pandemic. Rates got down as low as 1.9, 1.8 for a 30-year fixed mortgage if you were able to get in at the right time. I was able to get in 1.9, so I'm not planning to move anytime soon, or if I do move, I'm going to probably rent this place out because it's just going to be so profitable to do so. But that obviously means that I have a lot of money tied in here. And if I try to refinance, pull money out, I'm going to be at a higher rate. So there's no way I'm going to do that. So such concerns are likely to be amplified in the weeks ahead. The Fed meeting comes just one day before the Commerce Department publishes its initial reading of second quarter economic growth. Economists generally expect output to grow at an annualized rate of 0.5%, but several projections see the economy shrinking for a second consecutive quarter. A negative print would escalate concerns of an impending recession, as many regard back-to-back quarters of negative GDP as a clear sign of downturn, and that's what we've usually seen in the past year that's happened. A disappointing GDP number would also constrain the Fed even further. The central bank has caught flack for its fast-paced hiking cycle, with many arguing the Fed will stifle demand too quickly and quickly sap what momentum the recovery has left. Fed Chair Jerome Powell has pushed back against the notion that a recession is inevitable and repeated his outlook in a Wednesday's press conference, quoted as saying, "I do not think the U.S. is currently in a recession," he said. "There are too many areas of the economy that are performing too well." Obviously, jobs is one of those that he's talking about. Wages is another one as well. There are some signs the Fed won't have to act as aggressively in the months ahead. The national average gas price is down roughly 70 cents from its record high seen in mid-June, signaling the energy inflation that's plagued households throughout 2022 is easing up. Prices for other commodities are similarly trending lower, which is obviously a good thing. But here is a quick look at what an actual interest rate hikes do to somebody that has a home or is looking to buy a home, compared to when things were obviously a lot lower. So we're going to look at an example here really quick. So let's say you're buying a house for $300,000 right now. You're putting down 20% down. Had you bought that house back in just a year ago or a year and a half ago, you could have gotten it at 2.5% for a 30-year fixed rate. Your mortgage payment would have been only $948 per month on that house at $300,000. Now, people that are looking to buy a house right now for that same $300,000 house, you're paying $1,363 per month, not to mention that you're probably getting less of a house because of inflation. We've seen houses go up 20-30% in the last year and a half or so. So you're obviously now you're getting that house that was basically worth $200,000 or so before all this inflation was starting, right? So a house that was worth $300,000 back then is now worth closer to $400,000 or something like that. So that's obviously had an effect on it. But the big thing is obviously you're paying $415 more per month for that house, which translates to about $5,000 more per year. That's basically a car payment right out the bat. Somebody that wants to get a pretty decent brand new car, not something that's too fancy, but something that's, like a mid-sized sedan or something like that from one of the brands out there. You could be paying $415 a month. That's basically it. Not to mention that obviously gas prices have added to it as well. So obviously consumers are being strapped for cash, and it is obviously being seen, hopefully, with slowing down the economy a little bit. But I just wanted to point that out to you guys, that's kind of interesting way to look at it if you actually do the math on it. So, a little 3% increase is a huge jump, obviously, from month to month. Then obviously if you're buying a house that's $600,000, well, that's even getting worse for you there. That 3% increase is going to be obviously much more substantial, but if you can afford a $600,000 house, you really shouldn't be complaining too bad. Interest rates are still relatively low compared to when I first bought my first townhouse back in, that was, that was right around, right before the housing boom, 2007, right before everything crashed in 2008. Right? I'm trying to think here. No, I bought it earlier than that because I actually made money on the house. So I had a 7.5% interest rate on that house. This was my first house. Each year after that, or each time I bought another house, the rates were a little bit lower. In my next house, I got the rates at 5.5%. And then with this house that I'm currently in at, I've had a rate of 3.25%, and then I was able to refinance it down to 1.9%. So, like I said, I'm not moving anytime soon. If anything, I'll just rent this out. But that's it. Obviously, a good day for the markets, great day for Bitcoin for the miners as well. Hopefully, this can continue on. It is a little concerning right now with the way things are shaping up with the RSI on Bitcoin. Need a little bit of a pullback, I think, to make things a little bit more room to run up, I guess. That's what I'm trying to say. So let me know what you guys thought of this, as always. Thank you so much for watching. I hope you guys have a great day. We got 2 more days in this month, basically, and we're going to be done with the month, and then we're going to get new numbers for July from the miners, which is going to be exciting. We're still waiting, like I said, for Luxfolio to provide theirs. I may do a video on the small miners tomorrow without Luxfolio in it if they don't provide any numbers for June. So that's it. Thank you so much for watching. Hope you guys enjoyed it, learned something, and have a great night. I'll see you guys in the next one.